Okay, so we were talking about 10-year yields over 2, all right? So this yield, all right, so longer term interest rate to keep pushing higher aggressively, okay? This move to happen. Now this will bring stability into the market, all right? So the worst almost over, all right? So if let's say yield is going to drop again like that, all right, and going to stay below zero for longer term, which is very less likely. Okay, there is no reason for the longer term yield to go below zero now, all right, because everywhere you are having almost zero interest rate. Okay, and the longer term, interest rate's gonna rise as with compared to the short term interest rate, all right. And there are going to be a lot of money in the market, cheap money in the market, all right. So there are going to be stability. The worst is over. We hit the bottom in 2019 and now we are moving towards stability. So this is leading indicator. Okay, so 10-year yield over 2 is a leading indicator. Now it will keep pushing higher. Okay, and later on in next couple of weeks to months, market gonna follow this. Okay, this move, market gonna follow that move. Okay, so this is the chart to watch for next couple of months. If you know what is going to come next, all right, if you want to know what is going to come next. And the second chart is the oil. All right, so oil is the second most important chart to watch for next couple of months. All right, so if oil is going to stay below zero, below 20 to 10, all right, if oil is going to stay within 20 to 10 for longer term, all right, and it will stay for a while, for next couple of weeks to months, all right, it can stay there. Oil can stay there for a couple of weeks to months, all right, but longer term oil gonna reverse for upside, all right. So oil dropped, the rest of the market is also dropping, all right. And what people are doing, they are just buying dollar, all right. Why they are buying dollar? Why everyone is just running after dollar? Why they are not buying the stock? Why they are not buying the equities? Even silver is so cheap, all right, below their cash cost, all right. Similar way, many other metals are below their cash cost. The reason is, investors and corporates and countries, they need a dollar to run their functions, all right. If they're not gonna have a dollar, then how they gonna run their functions, all right. Okay, so that's the reason they are running after the dollar, so that they can keep moving their system, all right. So another thing, we are having liquidity issue in the market, all right. Demand is there for dollar, but supply is not there, all right. Demand is so much there in the market for dollar. Everyone is just running after dollar, all right, but demand is not there. So that's why Fed aggressively cut the interest rate, all right. So last week I was telling you that Fed can cut the interest rate very aggressively. Okay, so they cut the interest rate. Now we are having 0.25 basis point, all right, and going to stimulate the economy aggressively, all right. And we are having fiscal plans, all right, and monetary policy packages as well. So fiscal packages, and both government and banks are going to fix this issue. So a lot of cheap money is going to come into the market, all right. So last week Fed opened swap lines as well. So why they are doing that? Why Fed is doing this? Why they are quickly taking actions so that they can overcome on this issue. Yeah, market is trying to go out of control, so they're putting a lot of money into the market. Not just the Fed, all right, Bank of England is doing the same, EU is doing the same. Yeah, other major banks are also doing the same. Reserve Bank of Australia, Reserve Bank of New Zealand, Bank of Canada, everyone is doing that, all right. They are putting a lot of cheap money into the market so that they can stop this aggressive fall which we are having everywhere, all right. We are having that drop not just on equities, okay. We are having that everywhere. Every single asset is being affected by this, all right, by this epidemic, because world has stopped functioning, all right. Every, you guys can hear in the news that countries are shutting down, right? Countries are locking down their cities and states. Okay, so the most important chart going to be the yield, and the second most important chart going to be the oil. Okay, so if oil cannot stay there for longer term within these areas, okay, let's look at the historical price on the oil. Okay, so the historical price on the oil is above 10. Okay, so above 10 and within these areas, so 10 to 14. So the worst conditions going to be over there if your oil goes below 10. All right, I mean, we are not expecting oil to go below 10. All right, so every time when you see that oil is forming new low, so you are looking oil to buy. Okay, this is the chart is already there on the trading view. Okay, so you see there, last week I was asking you to watch this ABC move and one more drop, okay, or that bottom, and then look for it to reverse for upside from the bottom. So similar way, okay, every time when oil goes low, goes, test the previous bottom or form new low, so you are looking for this to bounce off aggressively, okay, and correct and longer term reversal. All right, if another move comes, then look for this to reverse. Okay, so it cannot stay there. So this is a known factor. Okay, this is reality that the oil cannot stay below $20 for longer term. Okay, why it cannot stay there for longer term? Because oil producing companies drilling cost is above, some countries cost above 20, above 40, yeah. Some Saudi's cost is above 10, close to 10, right? And Russians costing, drilling cost is also similar, like Saudi's 10, right? And the other countries cost vary, right? But many countries not gonna survive to drill oil at the current price. Okay, that's for sure, and they're gonna be shortage. Right? Currently, there is a lot of demand, but soon there's gonna be a shortage in the supply. There's gonna be a shortage in the supply. Countries are also, already, putting a lot of oil in their, storage. Okay, so it cannot stay there for longer term. It has to go up, and the rest of the market gonna go down. Okay, so every time when oil tests this 20, or let's say next time it is going to test the 15. Okay, so look for buy. So this is going to be a perfect longer term buy opportunity. So don't miss that opportunity. All right, don't miss that buy opportunity on the oil. Okay, you don't see these kind of opportunities every day. Yeah, so they're going to be, it is currently testing 20. All right, so every time when price goes to 20, just watch this chart next. All right, this is the chart you should watch. So oil gonna be a best opportunity to watch. So when oil gonna reverse, then the rest of the market gonna reverse. Okay, so oil reversal will bring reversal on the rest of the market. Okay, so then dollar cat gonna reverse. All right, so dollar cat gonna reverse to dollar cat. Okay, so dollar cat went higher. All right, so if we're going to look at the bigger time frame chart, all right, let's look at this chart. Okay, so when oil was around 10, okay, 10, between 10 and 50, 10 and 20, yeah, so dollar cat was at that top, 160. Okay, so if oil is going below 20, then dollar cat gonna push more higher. All right, then dollar cat gonna push more higher. Price will keep pushing higher. So every time when oil tests 20, all right, or slightly go below 20, then start looking for sell on the dollar cat. All right, and when oil bounce from the bottom very aggressively, watch dollar cat to go down aggressively. Okay, but this is going to be the big trade to watch. Okay, so at least go up to 125 or at least 130 area. So this is going to be a big trade too. Okay, so I'm going to look at the charts one by one. All right, and we'll show you the correlation as well. So oil chart going to be the important chart. Okay, now let's look at this one by one. So the Australian dollar and New Zealand dollar. All right, so Australian dollar, New Zealand dollar is testing the bottom. All right, so Aussie New Zealand dollar is testing the bottom, so there's going to be a perfect buy opportunity on this chart. Okay, so you're looking for buy on the Australian dollar, New Zealand dollar next week. All right, so there is a big flag. Okay, you got the bottom, and there is a big flag. Okay, so you are looking Australian dollar, New Zealand dollar to stay above 1. All right, don't go beyond 1, and this is your trade. Every time an Australian dollar, New Zealand dollar is coming close to the 1, you are looking it to buy. Okay, this is going to be a good opportunity too, even if it is going beyond the 1. So you're looking for it to buy. It is not going to stay below 1 for longer term. Okay, it will reverse. So prices are everywhere. Prices are testing, 2007 and 2008 recession lows. All right. Now, either we're gonna have recovery, or they're gonna be a worse crisis we are going to see than 2007 and 8. All right. Why worse? Than 2007 and 8, because market size is much bigger than 2007 and 2008. All right. So market size is much bigger. So highly likely you're going to see recovery. All right. Highly likely we're going to see recovery, not crisis. Okay, so currently looking for this correction to form and continue to go higher. If price break that bottom, test this area, all right, this one. So you're looking for buy. All right, that's your Australian dollar, New Zealand dollar chart. A good opportunity to watch for next couple of weeks to month. All right, and the next one is the silver. All right, so you all know that. So why silver is dropping? Why silver is testing 11? All right, so the question arises here is why silver is falling so much aggressively? Why it is not rising? It should go higher when the rest of the market is falling, when the stock market is falling, bond market is falling, currencies are falling. Why this is going down? All right, why it's not rising? Why it's going down? All right, so the reason is very much simple. There is liquidity issue. All right, so people are running after the dollar so that they can function their system. Right, that they can run their businesses. Okay, and whatever they are having, all right, they are selling that. They are converting that into dollars. All right, they are converting their silver into dollar. They are converting their gold into dollar. They are converting their bonds into dollars so that they can survive. All right, they can, their businesses can survive. Okay, so once they're going to have a lot of liquidity into the market, all right, so Fed is injecting a lot of liquidity into the market. So once they're going to have a lot of liquidity into the market, there are going to be a lot of dollars in the market. All right, then this is going to happen. All right, so this is what we have seen in 2007 and 8 crisis. Okay, similar behavior was there. People were running after the dollar, and once Fed put a lot of liquidity into the market, then we have seen recovery, and dollar went lower, and we have seen a very, very aggressive move. So we are not anticipating that kind of big move. All right, so if that kind of big move is going to happen, you're going to be lucky. Okay, but you are looking it to go up to 20 again. All right, so silver to go back to 20 again. So if we're going to look at the lower time frame, price slightly broke the bottom, all right, and went up to 11. Okay, so the lower the price goes on silver, the better the opportunity going to be over there for longer term. So start collecting silver for longer term. All right, so start buying silver for longer term. Okay, and every time when price come close to the bottom, let's say if it is going to test 1150 next week, you're looking for it to buy. Let's say it is going beyond 11 and going to test 10, watch it to buy for longer term. All right, so the worst scenario you're going to be over there on silver, it's going to test it 8. All right, the previous 2007 and 8 low. All right, yes, very much similar like Bitcoin chart. Okay, so if you're going to look at our Bitcoin chart, Okay, so when I'm going to show you the Bitcoin chart, similar way. All right, so Bitcoin also has done that. Bitcoin went higher and then came close to the bottom and then formed new high, and now doing something like that. Right. So we'll look at the Bitcoin chart as well. We are already into recession. Okay, so what do you think the scenario repeat itself? It is repeating. All right, so we are in recession. Look, all right, world is in recession. All right, so that's the reason prices are testing the recession lows. Okay, the previous recession lows. So it is already in recession. Okay, that's the reason market is dropping so aggressively. So gold, all right, so in last recession gold also did exactly similar way the way silver has done. Okay, gold went lower, liquidation issue, all right, and then people started to buy gold, all right, when they have a lot of liquidity into the market. Okay, so we are expecting two things on gold. All right, either correct and go down or one more up. Okay, so in the current environment, one more up move going to be more likely rather than the drop. Okay, so Fed has to drop the dollar. If Fed is not going to drop the dollar, then they're going to be issue for those countries who have bought a lot of debts, and debt servicing issue also going to be over there. So they're going to run after their debts. I mean, stronger dollar, their debts going to go much higher. Okay, so one more up move you're looking for. Okay, this trade from this previous bottom rather than sell. So sell is not there. Okay, so if sell is going to come, let's say if it is going to draw for one more move down like that. Okay, so look for it to buy back to this previous top or 2000. Okay, so there is possibility that the gold can go much higher. So silver gonna give you more return as with compared to the dollar to the gold. All right, so silver gonna give you more return as with compared to the dollar. Okay, so you're looking for gold to buy from 1450, all right, or 1460 within those areas. So for next week. All right, so this trade. Okay, so S&P 500. So S&P 500 dropped very aggressively. Okay, so very aggressively. So let's look at this chart, the other chart, the longer term chart. Okay, so S&P 500 dropped very aggressively. So the reason to show you clean charts so that you can see what's happening, all right? What's happening. So the drop is very much strong this time as with compared to the previous drops. Okay, the reason very much simple, guys. There is no science behind that. The market size is very huge this time. Okay, so the total market cap is around 27 trillion. Okay, at that top, so it has lost almost you can see that 7 trillions. Yeah, 5 to 7 trillions within this area. All right, it has lost almost if I'm not wrong, then it has lost 6 to 7 trillion. All right, 5 to 7 trillion within that move. All right, that's the reason why you are having that sharp move, because the market size is so huge as with compared to the 2002 and 2007. Yeah, that's the reason there is a sharp move. Okay, so yeah, recession is there. It has dropped significantly. All right, and the point to note is that it has lost almost 34%. Okay, 34%. And if another 70% drop is going to come, let's say 50% drop is going to come on the S&P 500. All right, 50% drop is going to come, which is possible. Okay, but we are not looking that drop. Okay, if S&P 500 is going to test 1500 to 1700 within these areas, so this is going to be a 50% drop. All right, and this is going to be huge. Okay, so from 27 trillion to almost 14 trillion, you can say that. All right, 13 to 14 trillion is going to be wiped up. So we are talking trillions, not billions. All right, so trillions. So trillion is going to be huge. So it has already lost almost 6 to 7 trillions within 3 weeks. Okay, so this is very less likely, guys. So there are going to be a lot of bankruptcies if it is going to drop up to 50%. All right, so this is very less likely scenario. Okay, so highly likely. All right, market, they are already using breakers. All right, so circuit breakers, so that they can stop that fall. All right, and soon you're going to see stability, and market gonna go back. All right, so we're going to see stability into the market, and people are going to start to buy. So which pattern I'm anticipating? We're going to say, let me look at the lower time frame. So people are expecting that they're going to be a V-shaped recovery. Okay, so this is a V-shaped recovery. Quick buying. They're going to be a very quick buying, similar way the way you have seen sell. Quick buying. All right, V-shaped recovery or L-shaped recovery. All right, this is L shape. These are patterns. All right, and this is a U shape recovery. All right, so the patterns you see on S&P 500, very often you see double bottoms. All right, so double bottom. So their price has slightly went below that, but this is a pattern. Okay, this is a pattern. All right, or there you can see that pattern. All right, double bottom, price formed double bottom and went higher. So we see that pattern very often. So what kind of recovery we are anticipating? All right, so we are anticipating L-shaped recovery. All right, so just recently, a couple of months ago, if you guys remember that, I have shown you that chart. Okay, we are having drop there too. All right, so we had a similar kind of sharp drop on this chart. Okay, so almost it has lost 50% of its value. All right, and then recover. So this is what we are anticipating. All right, so in the market, that's what you are looking on the stock market. All right, this is your L-shaped recovery. All right, this is your L-shaped recovery. So this is what we are looking. Okay, this will be there. This will be there. Okay, now let's move on to the S&P 500 chart. Okay, so you hopefully you understand that what's happening. So there are going to be a lot of problem if it is going to drop for another 7 trillion. All right, so 6 to 7 trillion. Now let's go to the lower time frame. Okay, how you should trade on it, that's the question. How you should trade on it. All right, there's going to be a 2-week chart. Or let's get from this. Okay, so this is what we are anticipating. Stabilize there around 22,000 to 23,000 within these areas, or in worst cases 2,000. All right, so stabilize at 2,000. Okay, and this is what we were anticipating, the price to break out or go for one more drop and form new low. All right, the price is going for one more drop. All right, so every time when you see that S&P 500 is forming new low like that. Okay, so price action, watch within these areas. Okay, to 22,000, watch within that area and look for it to bounce off very, very aggressively. Okay, so try to catch the lows. All right, so this bottom will give you a lot of potential. Okay, because they're going to be a quick buying. When people are going to start buying the S&P 500, the buying going to be really quick. You're not going to get enough chance. All right, and price going to move aggressively away with 400 to 100 points very, very aggressively. So watch lows every time when you are having lows, new lows are forming, watch those areas, okay, and watch price to rise aggressively from those areas, okay. And once you're going to see corrections, you can add more, okay. I'll try my best to keep updating these charts once you're going to see corrections, okay. Price can stay there within that channel for a while, okay. It can go there and it can drop for another time before you're going to see, you know, breakout on that on S&P 500. So every time when you see that the S&P 500 is forming new low, watch it to reverse aggressively from the lows. Okay, so last week on Friday, it closed back to the previous bottom because you're having that one more, you know, drop. We're going to price to rise aggressively, all right, and correct and continue to keep rising, okay. If not, then another corrective move there, similar way, okay, and then go down, okay, and then breakout, okay. So you're watching these areas. These are very good prices to watch for a reversal on the S&P 500 for longer term. All right, so trade with care. There is volatility, okay, and good luck. So similar analysis on the S&P Nasdaq 100 index. Okay, so Nasdaq 100 index is also dropping. Market volume, market size is so much high, right? So we are having bigger size, okay. So worst condition is this, one more drop back to that bottom and then continue to keep pushing higher, okay. We are not anticipating this kind of drop on it, okay. This is going to be a very, you know, worse scenario, okay. I mean, like 50% you know, drop or 80% drop, that's going to be huge, okay. That's going to be huge. So we are anticipating that the price going to stabilize, all right, at the current price, okay. So going to stabilize and going to start keep pushing slowly for upside, okay. So same analysis on Nasdaq 100 index. If you go and look at the lower time frame, you are having same, you know, pattern, okay. One more drop, all right. So one more drop or hold this previous bottom, okay, or go slightly lower than, and then break out, okay, and correct and reverse the drop which we are having right now. So watch every time you see you are having lows, okay. So natural gas is another good opportunity to watch. Let's look at this chart first, all right. So let's look at this chart first. Why price is so cheap, okay, why they are at so, you know, at the historical lows? Because we are, you know, the world is, you know, going into recession and everyone is just, you know, liquidating their asset and preferring to hold cash, okay. That's why you see everywhere drop. Prices are testing the lows, okay. If you look at the natural gas, the historical price is close to 1, all right. So it cannot stay there simply, okay. This price cannot stay there for longer term. At least it has to come close to $3 or $4 in longer run, okay, or this kind of move, or this kind of move, or, you know, just a small push back to 3, all right, back to 3, small push. So the average price, average cost is around 250 on it, all right. So it cannot keep pushing lower. There is no room left on it. It cannot keep pushing lower. So in short, every time when price is forming new low or coming close to the previous bottom, you're looking it to go higher. So next week, price to go up to 150 and this is your trade, okay, or hold the 160 or this previous bottom, okay. So this trade, all right, that trade back to 2 or go above 2, hit the 3, all right. So we are not expecting that the and you know, natural gas price going to hit the 3, you know, within the current environment, okay. But if it is going to hit the 2, that's going to be enough for you, all right, or slightly going above 2, going to be all right, because weather is changing, all right. Yeah, they're gonna stop drilling simply, okay. So US shale company is gonna stop drilling, Carl. They cannot keep drilling, right. Their cost is above 40, all right. And oil, where oil is, below 20. Yeah, if oil gonna stay there, 50% loss. So when they're gonna stop, then obviously, there's not gonna be a lot of supply in the market for natural gas. Okay, so natural gas also gonna go higher. So dollar, everyone is just running after dollar. All right, people want dollar. They don't want anything else. All right, they just want dollar. All right. So if dollar will keep pushing higher, then what you're gonna have? You are already having a recession. Then that recession can turn into depression. All right, or simply financial crisis. Yeah. So this is not going to happen. Okay, we are not anticipating financial crisis or something like depression. So central banks are already they are trying to cover up things. All right. So currently the current trend is simply bullish on dollar. Okay, so the current trend is simply bullish on dollar, but that trend cannot sustain. That trend only can sustain there for longer term if central banks are not going to put cheap money into the market, or if they are not going to provide liquidity to the market. Okay, then this trend will keep pushing higher. Okay, so we're going to see more upside. We're going to see more upside on dollar index. Okay, dollar will keep rising. So we are not anticipating that higher prices. We believe that it will at least will correct like that. Okay, there will be a bigger correction, something like that, and then we can see again one more push up or aggressive sell. Okay, correction and drop. Okay, that's what we are anticipating, not more upside. It is already hitting the previous top. So let's simply go to the lower time frame. Okay, so how you are looking on this next week? So short-term trend still up. Okay, so any trade you guys take for short term, make sure you trade with the trend. Okay, so short term trade, but longer term trade, you are looking for this to drop very, very aggressively. All right, so short term trend still up. Okay, it can push for a couple of more times for up before going to drop like that. Okay, so every time when it tests the previous top or form new high, you are looking it to drop very, very aggressively. Okay, so very, very aggressively correct. Okay, and then go down. Okay, so central banks are putting a lot of money into the market, then there will be a reversal. There will be a reversal on the dollar. Okay, or another, a card like Plaza card. All right, so if you guys remember the Plaza card, all right, when all central banks, sign an agreement to weaken the dollar, and after that, dollar went lower very, very aggressively. So similar kind of things can happen again. Okay, stronger dollar cannot work for the market right now. All right. So similar on the euro dollar. Okay, euro dollar, we are not anticipating euro dollar to go below this previous bottom. It can test. Okay, it can test. So there is room for let's say 300 pips. All right, 3 to 400 pips room is there on the euro dollar. Okay, so it can push there. So short term bearish. Okay, so short term go down, test the bottom. So any trade you take for short term should be bearish. Okay, after having corrections on lower time frame. Okay, but the longer term trade you should look for it to go back up. All right, this bigger flag to break out into that direction. And the important thing you should keep in your mind. So people are large speculators. Okay, they are turning bullish on euro for longer term. Okay, so the net positions are turning to be bullish. Right, so there is a crossover, which means that the longer term trend is about to shift on the euro for upside. Okay, the court report is telling. Okay, so if I'm going to look at the lower time frame on the euro dollar. Okay, so you look in this to break out. Okay, this trend to break out aggressively for upside. Okay, so short term, it still can push lower. Okay, so this trade for short term, go back up. All right, go back up, test that. All right, and fall aggressively. Okay, if not falling aggressively, all right, and correcting, okay, correcting, all right, then go back up. Okay, go back up. So volatility is huge, so aggressive. Trade with care. Okay, it can test that. All right, it can drop for one more move down back at the bottom. All right, it can test the lows. So start looking into reverse for upside rather than continuation to the downside. All right. So we are not anticipating it to go beyond 103. In worst scenario, worst cases, it can go beyond 1113. All right, or 14. Very less likely. All right, very less likely. So dollar chief. Okay, so dollar chief can push slightly higher. All right, this move, it slightly can push higher before going to drop. All right, so this is what we are having. Okay, this is the structure what we are having on lower time frame. All right, so if I'm going to go to the 4 hour time frame, or let's go to the lower time frame, 1 hour. Okay, so last week, if you remember, I have shown you this expanding triangle possibility. Yeah, if you remember, you got that, and price since forming that keep pushing higher. All right, so now this is your structure. All right, so first of all, similar short-term trade. Okay, this short-term trade like last week. Okay, so the short-term trade test that bottom. All right, and continue to keep pushing higher. Okay, if this move is going to be strong, all right, so stop looking for buy. This move is going to be strong. Stop looking for buy, correct and drop. Same analysis like last week. All right, so dollar CAD. As told you, before you go for short on the dollar CAD, watch oil. If you're not gonna watch oil and keep selling the dollar CAD, you're gonna get a lot of losses before you're gonna get the trade. Okay, so the lower the oil goes, you're gonna see more upside on the dollar CAD. That's what I'm telling you since last couple of weeks. All right, oil gonna go more higher. Dollar CAD gonna go more higher if oil is not going to stabilize. So oil is about to form bottom. All right, oil is about to form bottom. So any news can drive the oil prices higher. Let's say if Russians are going to say that we don't want war. All right, we don't want oil prices war with the Saudis. We want negotiations. Let's come back to the table. Let's negotiate. Let's cut the oil supply. Let's cut the oil production. Yeah, let's stabilize the oil prices. This news is going to be enough for the oil to rise aggressively for upside. People are going to buy oil very, very aggressively. All right. So any news similar like this can drive the oil prices aggressively higher. So watch for those news or aggressive buying on oil from the bottom. All right. And similar and at the same time aggressive sell on the dollar CAD. Okay. So what we are anticipating on the dollar CAD. Okay, aggressive sell, this kind of move to come. Okay, this kind of move to come, correct, and drop, or at least correct. All right, correct for this ABC move, and for push up for one more up move. Okay, so this is what you are looking. All right, so one more drop. Okay, if I'm going to go to the lower time frame, so your setup going to be on lower time frame. There is a flag. Okay, right now there is a flag. So once market going to open, you are watching that flag to break down very, very aggressively. Yeah, it can go back up. Okay, all right, so it can drop. It still can push up for one more up move. Okay, so you're watching this previous top, all right, or new high and the dollar CAD to drop. So big trade gonna be to the downside. So don't miss that trade. Once that trade, every time when dollar CAD is testing the previous top or forming new high, watch it to drop, watch it to sell. Don't miss that trade. This is gonna be a huge trade. Okay, that trade can give you almost let's say if price is going to test the 30, all right, in longer run. So that trade can give you almost 1700 pips move, all right, so from 47 to 130, all right, and there are going to be plenty of sell setups within on the lower time frame, all right. So correction, okay, first of all this correction to break down aggressively, all right, break down and reverse the trend. Okay, correct and continue to go lower. Oil is testing the previous bottom, all right, or oil can form new low. Okay, so this can still push up back to that top. Okay, if testing that top, you're watching it 47 double top and then drop very aggressively. If not, double top is not in play, okay, forming new high. So watch aggressive sell. Aggressive sells are already coming over there, okay. So join that once you see that aggressive sells are coming. So it's gonna be a big trade, okay. Specifically the oil buying and the dollar CAD gonna be a big trade. All right, so Australian dollar crashed last week. All right, so we were not expecting that to crash last week, but it crashed. All right, so it went lower than the recession price. Okay, now either they're going to be a worse scenario, this is going to be a worse scenario. All right, if it is going to keep pushing lower, worse. Stock market going to push more lower, oil price is going to go much lower, dollar going to keep pushing higher. All right, and the actions central banks are taking, they're not going to do anything. All right, they're not going to fix the problem. All right, so rather than keep pushing lower, reverse. Okay, reverse and go back up. Okay, this kind of move after recession. All right, if not that much far away, just go back to that 80, or correct. Okay, or correct on lower time frame, this correction. Okay, that trend correct and one more drop. All right, so they're going to be a buying soon on the Australian dollar. So it has hit the lowest price. Okay, so this kind of correction, right? So this kind of correction to happen, and longer term, this is the structure. So on lower time frame, let's go to the lower time frame. Okay, so once market gonna open, there may be a gap. All right, so there may be a gap on the Australian dollar, small gap with 20-50 pips. All right, so once price come close to that bottom, all right, so this trade for next week. All right, so watch this bottom and look for that trade. Okay, if price is not rising aggressively, this trade is not going to happen, breaking that bottom. Okay, this breakout is not happening. Okay, right, this correction is not breaking up, and price is going for the next bearish leg. All right, okay, ABC move is completed and breaking and going for the next leg. Okay, so this bottom for buy or new low for longer term reversal. So there's going to be a plenty of return on it once price going to start going to start forming a correction over there. Okay, this big correction, right? There's going to be plenty of return. Just look at that, where it is right now. So there's going to be a stability. Why stimulus packages are not working? Reason is very much simple, that countries are shutting down their borders and their cities. That's the reason. So once they're gonna open, they're gonna be a quick recovery. Okay, so same on this chart. Okay, so bigger correction or reversal back to this area. A lot of dollars are coming into the market after 2008 and 2000 recession. Liquidity issue was there, dollar was strong, a lot of supply was there in the market for dollars. Dollar went lower. All right, so similar way again, supply, dollar is strong because liquidity issue is there. All right, and central banks are trying to provide the liquidity, either this correction or longer term reversal. Okay, so downside is possible. All right, downside gonna be over there after correction. So once there's gonna be a correction, then you can watch it to continue to keep pushing lower. So similar analysis. Okay, there might be a gap on lower time frame as well for 50 to 60 pip. 50-60 pips are nothing these days. All right, so market is strong, highly volatile, volatility is high. Okay, so this trade, okay, if breaking that bottom or new low or buy, if going to test the 54 or 55 or even 50 areas, so reverse for longer term. So dollar yen. Okay, so dollar yen is same issue everywhere. You are having same issue. Okay, so the issue is same. Yeah, there is possibility that the dollar against the yen can go back to that top. All right, in 2016, we have the shock, oil shock, all right, cheap oil prices, and dollar yen was being traded at that top. Okay, so it can break out that. Right? It can break out that and can continue to go higher. Why bullish on the dollar against the yen? All right. So normally yen behave as a safe haven. All right. Normally yen behave as a safe haven during the uncertainties, but currently yen is not playing as a safe haven against the dollar. It is playing safe haven against the other major currencies, but not playing as safe haven against the yen. All right. Why dollar yen to keep pushing higher? Yeah, why dollar yen to keep pushing higher? All right, the reason is that when stock market gonna keep pushing higher, all right, yen will also keep losing value against the rest of the major currencies and against the dollar as well. Okay, so this trend can stay there for a while before you guys gonna see it drop on the dollar against the yen. Okay, it can push up to that top or up to 120. All right, so what is the structure? What is the formation? Okay, the formation is this is the formation. Okay, you got the move. Okay, this is the formation. Okay, the longer term that flag gonna break up. Okay, that's the formation. So the question is how to trade on this move. All right, so this move gonna be easy to trade. All right, this move gonna be easy to trade, but the question is how to trade on this move. All right, because price is testing these previous tops, okay, and it can reverse at any time rather than keep pushing higher. All right, so when you are going to buy the dollar yen for that move, make sure you trade with care. Okay, trade after having correction. All right, and once correction breakup, continue to keep pushing higher, stay into the trade. Move on break even, stay into the trade, and watch for the next correction and dollar yen to keep pushing higher. Yeah, once dollar yen break very aggressively this trend, okay, the trend which is just appearing over there similar way, then you are having top. Dollar yen is going for one more drop back within this sideways market. Okay, so more likely that the dollar yen gonna draw for one more move back within the sideways market rather than for more upside. Okay, but once you're gonna trade for either direction, okay, if you are trading for buy, for sell, just simply trade with care. Okay, so last week this correction happened, all right, and the price still pushing higher. Okay, forming again similar kind of correction. All right, like other pairs I have just shown you. Okay, so this okay, you see that once you see that correction, price is testing, holding, yeah, continue to go higher, put stop behind that and watch it how far that goes. Okay, form again correction, stay into the trade. All right, okay, so when you should start selling the dollar yen, okay, you should wait for the aggressive sell to come. Okay, correct and go down. All right, so the euro yen, okay, so euro yen is also coming close to the recession lows or previous bottoms. All right, so 2016. Okay, so let me go to the lower time frame simply rather than looking at the bigger time frame. So you're looking at to hold the previous bottom and go back up. All right, so simply this is your trade for next week. When you trade for this move, make sure you understand that there is uncertainty into the market. Okay, so trade with care against the yen, specifically on these currencies. Okay, so pound yen broke out the previous bottom, went lower after forming lower time frame corrections. Okay, and in a very strong bearish trend. So simply you're looking for pound to reverse for longer term. Okay, currently as told you, short term bearish. Okay, on lower time frame, stay short term bearish as long as you see 15 to 30 minute time frame corrections are happening. Okay, so stay trending for a couple of pips. And once you see that the aggressive move is coming out from the bottom, start buying the pound. Okay, start buying the pound. And this is the longer term trade. All right, this is the longer term trade on the pound dollar. Okay, so on lower time frame, currently you're watching this ABC move to break out for upside aggressively. Okay, so aggressive breakout. Okay, buying, waiting, buying, waiting, and keep buying all the way back to the 130, 135, or 140 for longer term. All right, so pound cannot stay there where it is right now for longer term. Simply, it will go above 120 easily, quickly. Okay, quickly. We just need some stability into the market. It will, you know, bounce back really quickly for upside. Okay, so don't miss the buy on the pound dollar for upside. It has done the bearish move. Okay, almost done. So the worst scenario on pound, if it is going below 110. Okay, this is going to be the worst scenario, below 110. But even if it is going, the lower the price is going on the pound dollar, all right, the best the opportunity gonna be for longer term. So when I say longer term, means that for a couple of months to years, all right, for a couple of months to years, and plenty of buy opportunities gonna be over there. It has done, okay, it has done this drop, so they're gonna be a buy for longer term. But make sure you buy after watching some price action. Don't just guess. Don't just get into the trade without price action. If you're going to get into the trade without watching price action, you're going to lose a lot of money, specifically during this market. All right, the market which we are having since last 2 weeks. This is very, very volatile market. Okay, so trade with care within this environment. Okay, because market can move very, very quickly. Okay, and you can lose money if you're not gonna protect your trade with stop losses or break evens. So pound short term continuation to the downside. Okay, and longer term continuation similar way like last week. All right, so last week I think I was showing you something like that kind of correction there. All right, and it just went lower. So same again. Okay, so if rising correctively, one more drop, again test the bottom and double bottom, then reverse. All right, so this is another trade you should watch for longer term. Okay, so it went higher last week and coming close to the parity. Okay, it went higher, coming close to the parity. Let me check if I do have updated chart. No, I don't. So it's coming close to the parity. Okay, let's look at the lower time frame. So the trade you are looking is the sell. All right, so last week I have explained to you guys by showing this chart. Okay, showing weekly chart from there. So you are having same price action over there again. Nothing new. Okay, price action is just coming out. Okay, so what is the trade? That is the trade. Okay, how to trade, where to look for, just go to the lower time frame. Okay, so first of all, one more up move, or let's draw some lines over there. Okay, this trend line. Okay, so it slightly can push higher for another move. We are not anticipating, but it can go, okay, like this. It can push back to that top, okay, or new high. If going to test this previous top or new high, okay, this is the trade you should search. All right, so if I'm going to go to slightly lower time frame. Okay, so currently it is forming another flag. Okay, this flag. All right, that flag. So you're searching this flag to break down aggressively, okay, and entry and stop. Okay, if not breaking and keep pushing slowly higher back to that top, okay, then watch this expanding triangle formation or this top, guys. So the trade you should catch is the reversal. Okay, chart is there on this weekly time frame. All right, which trade you should search. Okay, all right, so that was the bearish move last time. So same trade you are searching on the euro pound from the previous highs. All right, buy here for longer term. Okay, last week it was bearish, and again, if you look at the market, if you look at the currencies, you look at this the metals, you look at the stock. All right, so we are testing recession lows. All right, Okay, so we are testing recession lows everywhere. Okay, it is also close to the previous bottom and the recession lows, the previous recession lows. So either we're gonna have recovery, this is recovery, okay? Either we're gonna have recovery, all right? This recovery, or worse scenario, okay? This is very less likely. Highly likely, central banks are, have taken already, actions. So highly likely, you're gonna have recovery, all right? So you're gonna have recovery rather than, you know, more drop. Okay, so you're looking for buy from the bottom, similar way the way I have just shown you on the pound dollar. Let's go to the lower time frame. There is another flag is in formation, okay, but slightly a sharp to the downside. Okay, breakout, okay, breakout aggressively, entry stop, or test this previous bottom. Okay, test that previous bottom and reverse for longer term. Okay, so short term one more drop is also possible. So pound CAD can stay there where it is. This is the pound chief chart, sorry. So pound chief to go back up, all right? So pound chief to go back up, all right? And on lower time frame, similar like the pound dollar chart. Okay, so go back up, reverse from the bottom. So if I'm going to go to the lower time frame, I'm going to look at the lower time frame chart. It is also doing similar way, okay, like the pound yen chart. Okay, let's go further down. So just keep in your mind one thing, and that is either recovery or worse scenario than the 2007 and 8. Okay, so highly likely recovery. All right, so breakout aggressively and reverse the trend. Okay, same like the pound euro pound chart. Okay, or go down, expanding triangle and then reverse, or test this previous bottom. So you're simply looking for these pairs to reverse for longer term. All right, so pound CAD to go back up from the current price. Okay, so pound CAD to go back up from this current price. Okay, rather than continuation, go back up. Okay, go back up, stay within these ranges for short term. All right, and pound Australian dollar. Pound Australian dollar also volatile, moving sideways. Okay, so we are expecting it to go down. Okay, at least this move. Okay, that move. So Australian dollar needs to get strong. Yeah, so trade with care on this pair. Okay, as long as pound is pound gonna stay strong, then this pair not gonna drop. Okay, so trade with care and watch for sell every time when you see highs. Okay, these previous highs. Okay, these previous highs and then look for them to drop. All right, and just trade sideways within these areas. Okay, short term trade for short term within this sideways market. So big trade is not there at the moment. Okay, so same on the pound New Zealand dollar. Okay, so stay sideways rather than trending. Stay bullish on the rest of the GB pairs and sideways on these pairs. Okay, so sideways. If test the top, go down. Okay, and this move. So currently these two pairs are not best to trade. Okay, pound New Zealand dollar and pound Australian dollar. Okay, so you can trade on them for short term, for up and down every time in price. Test. You can see there is a sideways volatility. Okay, so when test the top, sell. When test the bottom, buy. So sideways, use support and resistance strategy there. So pound CAD, test the previous top and go down for one more drop. Okay, so go back up, test that top and short-term trade. Okay, on a bigger time frame, reversal. Okay, so we are hitting recession lows almost. Okay, not exactly, but almost. Okay, so this room still there. All right, we still have room. Okay, price can push lower back to that bottom. previous recession. All right, so longer term recovery, okay, this recovery like last week. If I'm going to go to that daily time frame, I'm going to remove that. I'm going to draw a trend line. Because the setup I have shown you guys on lower time frame for next week. So for longer term, okay, longer term reverse, okay, similar way reversal, and short term one more drop. All right, so how to trade on lower time frame? Go to the lower time frame. There is a trend, that trend, okay, that trend to break out. Okay, so short term still up. All right, so short term still up. Okay, break that trend, either forming new high or current price correct and tag that bottom. So short term one more drop. All right, so all right, so same analysis on these two pairs. Okay, so we are hitting the recession lows. We are in a recession, guys. Okay, recession lows. So either we're gonna have recovery. All right, this is recovery. Okay, either we're gonna have recovery back to that top for longer term, or we're gonna break these lows and we're gonna have worse conditions in the world. Okay, break below that bottom means that worse recession is going to hit than 2007 and 2009. Okay, break below. So highly likely we're not gonna get that breakout. Okay, we're gonna have recovery, guys. Okay, at least that correction. Okay, similar kind of correction. So trade with care with the trade with care on Uzi yen for buy and Kiwi yen for buy. They are very, very risky pair to buy. All right, so trade with trend on them. Okay, every time when you see that they are correcting, so go with the trend. Okay, so first of all, flat formation. All right, similar like the Uzi yen, other Uzi yen pair. Okay, so next week this to correct back to that top, okay, and then again drop. Okay, so this can be a reversal as well. Okay, this can be a reversal as well, or bigger week daily correction which I've just shown you in a bigger time frame. So if you buying, specifically if you buying Uzi yen and Kiwi yen, so trade with care. Okay, trade with care. They can fall very, very aggressively. So stay short term bearish, short to medium term bearish once you see that the bigger correction is going to happen. Okay, so same analysis, flat to form, test that bottom, go back up, test that top, and drop for one more move. Okay, this might be a reversal for longer term, as I said, because central banks have already injected a lot of cash in the market. Okay, so they need to put more, so then you're gonna have stability. So they are trying to fix things. Okay, so longer term, this go back up, correction, this kind of correction, or recovery. All right, this recovery. So there is a lot of room on this pair. Okay, there is a lot of room on this pair. There you see that 2009 recession low. Okay, this pair can draw more than the others. All right, more than the other currencies. Kiwi can draw more. All right, so this is doing well. This is doing well in recession. Fears. Okay, all right. So if things are going to get more worse, it can drop very, very aggressively back to that bottom. So when you're buying, just make sure you understand that. Okay, there is a room for more on side. Okay, so Kiwi CAD, all right. So there is also a lot of room on it for more downside. Okay, you see that in 2009 recession. Okay, so a lot of room is there. So hopefully we're not gonna have that much worse. Guys, when I say that stability means that those who are having jobs, stability for them. Okay, so if you guys want to see recession or depression, okay, that means you're gonna lose your jobs. Okay, so hopefully guys, you're not gonna lose your jobs, yeah, and there gonna be stability, and things gonna be normal. Okay, so hope for the best, don't hope for the worst. All right, but just be prepared for the worst. All right, and hope for the best. Prepare for the worst, hope for the best. All right, and hopefully there going to be, stability. All right, so you already, going to have a lot of, unemployment going to jump in the US for next week. All right, so people are, filing a lot of unemployment applications in the US. And just look at that. The forecast has jumped aggressively. So the previous one was 281. Yeah, so the forecast is the 750 unemployment complaints claims. Yeah, it can go much higher than that. So this means that, guys, you can lose your job if these prices, the prices I'm showing you, is going beyond 2007 or 9 recession lows. All right, you can lose your job, guys. If you are having your own business, yeah, and there are many other people who can lose their jobs. So hope for the best rather than the worst. All right, so hopefully we're going to have stability, and the central bank's going to fix this issue. Okay, and we're going to have that trade. All right, so watch lows for buy. All right, don't hope for the worst, guys. It's going to be really painful for many people. Really painful for many people. All right, so Euro New Zealand dollar also go down. Okay, so I'm showing reversal everywhere, guys. Market has to reverse. If it is not going to reverse, then there is already one-way street. All pairs are running towards recession, previous recession lows or tops. Okay, that's the previous recession. If central banks are not going to be successful, this is going to happen. Okay, trend going to stay there, and price is going to keep pushing there. Okay, so one more draw, Euro New Zealand dollar to drop. Okay, there we are having a lot of manipulations last week. Price went up, then aggressively went lower, and then sideways. All right, so rather than this move, that move. Okay, so I told you last week, I have shown you example there. Okay, there was the manipulation last time when central banks started to manipulate, and we have a lot of volatility, and then prices reversed. Okay, so similar thing going to happen again. A lot of manipulation is just happening, and you're going to have soon reversal. So trade with care, specifically on these pairs: Euro Australian dollar, Euro New Zealand dollar, Aussie chief, yeah, New Zealand Kiwi chief. All right, and which are correlated to these four pairs. All right, and Australian dollar, New Zealand, Aussie dollar as well, Australian dollar, US dollar, New Zealand dollar, US dollar. All these are highly volatile. All right, so drop. Okay, so test that top and drop aggressively. If not, then shut them up. Okay, test that top and drop. All right, so there is volatility, guys. There is volatility. Just look at that. Okay, so whenever prices are testing the previous highs, then watch those highs to reverse. Okay, if price is going to test 2, watch it to reverse. All right, if price is going to test 2, okay, or correction is going to happen there. Okay, bigger correction, daily correction, then drop. Yeah, this is your top. If price is going to test that top or reversing 50% of that, so you're looking for it to reverse. Same analysis on this chart too, guys. Currently it is very, very strong. Okay, it can push higher as it said. Okay, this can keep pushing higher. It can go even beyond that, but for that there should be a bad scenario in the market, fundamentally bad scenario. So hopefully, guys, we're not gonna get that. We're gonna have normal market very soon, and we're gonna have either another correction for one more up move or longer term reversal. Okay, so these are the normal prices. All right, so market prices, price should stay within these areas. Okay, this is an, you can say that certain market certainties. All right, so prices should stay there within these areas everywhere. So should stay, 50%, below the 50% below the previous recession, or 50 to 60% above the previous recession on some pairs. All right, because some pairs are falling and some pairs are rising. Okay, your place to watch is this. Okay, so 2008 and 9, 2007 and 9 recessions. Okay, so euro Australian dollar to drop to. Okay, so Uzi CAD also can continue. You see, right? Everywhere you are having same scenario. We are moving, towards crisis. Okay, either we're gonna have that or stability. Okay, so highly likely we're gonna have stability. So up. Okay, so up rather than continuation. So stay short-term trending and longer-term reversal. If I'm going to draw a trend line from there to there, all right, so correct and then continue, or bounce off and break the trend and go back up. Okay, so again, trade with precautions, all precautions. All right, same chart like other Uzi. Okay, this flat formation. Okay, breakout and continue for the next leg. Counter when you are going against the trend, guys, trade with care. Okay, so last week euro CAD to drop, it is dropping. Okay, but crisis hasn't over yet. Okay, we are still in crisis. Okay, so the previous high was that 2009. All right, so oil $10, euro CAD this top. 175. Okay, oil hold bottom $20, bounce up from 20. All right, euro CAD to go back lower. Okay, euro CAD to drop. So let's go to the lower time frame. Okay, so I'm going to go to lower time frame further. All right, so there is the expanding triangle. Okay, there is the trend. Okay, so it is correcting on lower time frame. Okay, so if that correction is breaking aggressively, so just take that trade and continue to go lower. Okay, if not breaking, holding that bottom. Okay, so this short term one more up move. Okay, like that trade. And once price going to test that top or previous high, boom, go down. Oil, as I told you guys, oil is the most important chart. Okay, oil will set the direction of the rest of the market. All right, so watch oil. Okay, when oil gonna found a bottom, then the rest of the whole market gonna reverse. Okay, so this will stay trending for short term, but not expecting it to go beyond 1. Okay, so slowly price can keep pushing lower up to 1. Okay, but this is going to be the trade. Okay, stability. All right, so stability. So on lower time frame, short term up. All right, so short term buy. So just trade with care. Okay, so short term buy that trade. Price to go back up. Dollar peso. Again, specifically, there is no life for these currencies. Okay, that's the reason I'm telling you again and again. Dollar needs to go lower. If dollar is not going to drop, those countries who have bought a lot of debts, there are going to be problem for them. Either they're going to search alternative for the dollar, or dollar has to go lower. Okay, either they're going to be alternative for the dollar, okay, which is going to be threat to the dollar, right? Either they're going to be a stability. All right, all right, so let's go. So dollar peso, is very, very strong. All right, so dollar peso to correct. Okay, some people were selling the dollar peso. Don't sell it. All right, don't sell it. If you're gonna sell it, you're gonna burn. Okay, so before you selling it, you need a really good price action. All right, or really good skills to go for a shot on it. All right, but we are anticipating this correction. So this correction does not mean you should start selling it. Yes, you can sell it, but as I said, you need skills, guys. Okay, you need skills. If you have a skill, then trade for this move. Otherwise, going against this longer term trend means that you are harming yourself. Okay, and specifically if you are having a small account, that small account not gonna survive. Yeah, that small account not gonna survive. You're gonna wipe out your account within a couple of trades. Yeah, specifically if you're not gonna use stop loss. Okay, so short term up. All right, so short term, one more up, all right, and keep pushing higher slowly, the way it is doing right now, and drop aggressively for bigger correction as I have just shown you. Okay, it can drop from the current price as well rather than pushing for higher. So once you see that the sharp sell is going to come, very, very sharp. Okay, when I say sharp, that means stronger sell. Okay, just go back to the previous chart, just watch that. If you see that sharp sell is going to come, then start selling it. But before going to sell it, make sure you understand that what's happening in the market fundamentally, what is driving. All right, so something like that stronger sell you need to watch before you start selling the dollar peso. Okay, otherwise you're going to burn yourself. Okay, so cat knock, don't cat chief. All right, cat chief, cat knock is also similar chart like the dollar peso. Let's look at the cat knock, then we're gonna look at the others. Okay, if you're gonna counter this, you're gonna burn yourself. All right, so I was showing you a buy setup somewhere there within these areas, if you remember. Okay, and there you go, very, very aggressive move. So don't even think to go against that trend. Okay, stay trending. Okay, watch these kind of sideways move and look for them to continue. Okay, another correction to come and continue to go higher. So people were some experts were saying that Norwegian Corona gonna do really well, right? But it's did very badly. It's did very badly. Okay, so there I was showing you, if you remember. Okay, this pattern formation. So same on this chart like the dollar peso. Okay, so you need a really good skills before you counter that, but definitely there's going to be a bigger correction. Okay, and same analysis like the dollar peso. All right, so big players are fighting there. Okay, big giants, elephants are fighting there. All right, or you can say that central bank is trying to set the direction for their currency. All right, that's the reason why price is going up and down very, very aggressively. So when big players are fighting, then stay trending. So cat chief, okay, again chief is very, very strong currency, and cat chief to go back up. Okay, price is forming bottom, let it form bottom and then trade into that direction. Okay, so it's really dangerous. I'm saying again, okay, it's really dangerous to go against the trend. Okay, this is a longer term trend. Okay, but this is not going to be the trade. Okay, this is going to be the trade. So from lower time frame, from bottom, just trade with care. Okay, and the correction is in already formation, that correction to break out aggressively for upside. Again, oil is the chart to watch. Okay, when you're gonna see that the oil gonna drop, cat chief also gonna keep pushing higher. All right, then this breakout. Okay, or test the previous bottom. Okay, again Uzi chief, trade with care, same chart like other Uzi pairs. All right, so longer term reversal, test that bottom. Okay, and continue to go higher, or test this previous bottom. So again, trade with really care on these pairs for buy. All right, this is going to be counter trend trade. At some point, you're gonna have bottom. Okay, this is gonna form bottom and gonna reverse back to that the average price. So both are behaving same, Australian dollar, US dollar, and Australian dollar and chief. Okay, almost the same prices you are having, 57.30, and almost the similar price you are having on the Australian dollar, US dollar, 57.80 or something like that. Yeah, and same price on the Kiwi Chief as well, 56.40, and similar price you are having almost on Kiwi dollar, US dollar, 56.80 or 56.50 something. Yeah, just couple of pips a difference. All right. So the price is strong, trending to the downside. Okay, we can have that kind of bigger correction, stability. All right. So stability. So again, trade with care. They are going lower. They can keep pushing slowly the way they are doing right now. So we need a big changes. Something, big is required in the market. So central banks did not, fix the issue since last crisis. We are moving very quickly towards that again. Okay, so they need to fix things. Okay, they need to do something big, not just opening swap lines, not just putting 1 trillion, 2 trillion or 4 trillion liquidity into the market. They need to do something big. All right. And the other thing is that they are not having a lot of ammunition left in their toolbox. Interest rates are close to zero, so they need to do something big. Then these prices gonna reverse. Yeah. So if these prices are not going to reverse, just imagine what is going to happen in the world. When I say what is going to happen, a lot of people gonna lose their jobs. A lot of people gonna lose their businesses. All right. A lot of casualty is gonna be over there. Yeah. If you remember the Lehman Brothers in 2008. Yeah. So similar kind of. Just look at the Boeing. What's happening with the Boeing? Okay. Boeing was a big company, right? Let's look at the seems to be my something having, yeah, there you got. Okay, let's look at the Boeing. Look at that. Okay, so company Boeing, who Boeing is a company which makes plane. All right, I hope you guys know that. Okay, look at that. They built that company. It took almost 1980 to 20, almost 40-60 years. All right, maybe more than that, to build that company. Okay, and there where it is going in last couple of weeks, or you can say that in last 2 months where it is going. All right, so the top was above 450 and it is running below 100. So similar way, there are going to be a lot of casualties, guys. Okay, we need stability. So governments and central banks need to stabilize that. Okay, if they are not going to do that, then there are going to be casualties like that. Okay, Boeing is asking for 300 billions from government to save themselves. So similar way, there are going to be a lot of casualties. When I say a lot of casualties, means that a lot of you can see that bubble is popping. All right, this looks more like a bubble. All right, you can see that the bubble is popping. Yeah, you can see that. All right, you can see that. So they had cash problem before corona, right? Now government gonna give them a lot of cash, otherwise company gonna be wiped out forever. So there are many like that. This is not the one. Okay, this is not the one which is which is being affected. There are mostly those companies are being affected which are technical companies. There's more airline, all right. So airline companies are getting affected because you can see there that countries are shutting down their airports. Okay, and no more businesses for the airlines. All right. So we were looking at the dollar Chinese yuan. Okay, dollar Chinese yuan still can go for another run for upside. All right. So for another run, okay, this run, okay, so similar like that run, another correction. All right, this channel. So it can and drop from the top aggressively or correct and continue to keep pushing more higher. So short-term bullish. All right. So dollar rand. People, mostly ask me what is your take on the dollar rand. Don't go against the trend, all right? Okay, don't go against the trend. Don't go against the trend on the dollar rand. Don't go against the trend on dollar Turkish lira. Don't go against on the trend dollar peso. And what else currency have shown you that, yeah, can knock, right? They are really, really strong. Again, you should start selling the dollar against the rand then when your central bank is doing something, or you are going to have another agreement like plaza card. Okay, you see that I was showing that one more up move, so it's pushing higher. So don't even think to go against that without having a strong price action. So if you're going to do that, there's going to be a problem for you guys. Wait for the price action over there. Once you see that the price action is coming over there, then drop. Okay, one more bigger correction like that. All right, but before going to happen this, you're gonna see a lot of changes in the market. Okay, so we have that shock in 2016. Yeah, there were a lot of changes. Oil was cheap at that time as well in 2016. Okay, oil started to stabilize, market started to stabilize. All right, again, oil needs to stabilize. You're going to see stability there too. Okay, let me finish the majors. All right, so let's look at the US 30. Same analysis on Dow Jones Industrial. Okay, it looks like that the bubble is popping. Okay, if this is bubble and is popping, then there are going to be a lot of problem, guys. Sell is very huge. Okay, so the pattern which we are anticipating. Yeah, okay, deflationary bubble, you can see that. All right, so this move, this pattern. Yeah, this is the pattern which we are anticipating to form on the equities, on US equities. Okay, and there will be stabilities, guys, soon. Just make sure you trade with care. Okay, you trade with all precautions. Okay, now this is the pattern which we are anticipating. So we are not anticipating aggressive sells. Aggressive sells is over. Similar analysis like others. Okay, short-term continuation, new low, correct for another time and keep pushing lower slowly the way it is doing right now, or break out. Okay, this channel to break out, correct, and over. Correction is over. Okay, so breakout, aggressive breakout will give you a signal that this trend, okay, this trend breakout, okay, this trend breakout, see that correction. Okay, another correction is forming. Once you see that the trend is breaking, that trend aggressively, correction is coming, then correction is over. The sharp correction is over and we are going to continue. Okay, so same on this too, short-term continuation. Okay, they are in a trend, short-term continuation to the downside. Okay, so one more drop can happen. All right, one more drop. Okay, correct or bounce off. There will be strong buying soon. They cannot keep going the way they are going. Okay, there will be stop. Okay, it can push up to this low, guys, up to 2007 and 8, 2007 and 9 recession areas. Okay, they can push lower. Okay, but the longer term trade going to be for upside. So short term, one more drop, stay trending, and longer term reversal. Okay, same on this. Okay, and same on this. All right, so this kind of pattern. All right, so short term still, let's simply go to the lower time frame rather than looking at this. Okay, 1 hour time frame or 4 hour. Okay, this trend stay trending. All right, so one more drop. Okay, one more drop and bounce off very aggressively. Okay, and reverse. So short term continuation, longer term reversal. Same on others equities. All right, so trend is there. All right, so trend is there. So one more drop. Some exchanges are stopping short. Okay, you cannot sell them anymore. Okay, one more drop and then aggressive rise and reverse the trend. Okay, you are having a very aggressive sell everywhere. All right, so there will be a reversal soon. If not reversal, then they're gonna be a stability. Okay, so stock 600 almost lost 40%. 40% is huge. Just remember the Marvel chart which I have just shown you with the S&P 500. Okay, there's going to be a recovery like L shape. Same. Okay, same on this. All right, so if Nikkei index is going to drop, then you're going to have a similar kind of drop on it like Bitcoin. Okay, Bitcoin has doing this. Okay, one more drop back to the bottom and then continuation. These are patterns. So go to the lower time frame, one more drop, right, and then reverse. Okay, one more drop, form new low or test the previous bottom and then reverse. Okay, same on the US 2000 as well. Okay, you see there, breaking one more drop and then aggressively reverse. All right, same on the euro. Euro stock 50. All right, so one more drop. Okay, and then reverse. All right, so there is no a bottom or tops or something like that. Okay, so you should not wait for bottom. You should not watch price for bottom and top, specifically on the equities these days. Okay, so you should wait for the aggressive buying. When aggressive buying will come, everyone will see that the aggressive buying is coming. Okay, so aggressive buying will let you know that the reversal is going to come. Okay, so same. There is no aggressive buying at the moment. There is a previous trend. Okay, so aggressive buying. All right, so platinum is also going lower. So soon there's gonna be a correction or quick recovery above 750. Okay, this kind of correction or quick recovery. Okay, so just watch for reversal on lower time frame on platinum. Okay, lower time frame for buy. All right, so it has dropped very aggressively. Just watch it to reverse for buy. Let's check the chart. All right, if we do have that, let's check. It should be on a somewhere there you got when we were looking it to go down. Okay, so it slightly went higher and then boom, dropped very aggressively. So we went lower than the previous bottom. Okay, so now this trade. Okay, so go back up. Okay, so palladium. All right, so palladium will also continue the trend, the bullish trend. Okay, why all these are dropping? I said to you guys, there is a liquidity issue. Everyone is just selling whatever they have and they're running after the dollar. Okay, continuation for upside. Stabilize first, price to stabilize first, and then go higher. Okay, either there will be a worse scenario or better. So most likely there will be a stability. Okay, most likely, because central banks have taken a very aggressive action within last 2 weeks. All right, and just go back up. Okay, from the previous bottom or form new low. Yeah, so this is the previous recession low. Okay, we have a lot of room on the copper. Copper can push lower up to that. All right, so just trade with care. So UK oil as well, Brent is also same like the other oil, like the the US oil. All right, so let's look at the lower time frame. When I say lack of liquidity, Kuba, that means, you know, you know, people want dollars. Okay, people want dollars. Why they want dollars? They believe that we are going to see recessions. Okay, we are going to see recession. All right, that's the reason. Yeah, those businesses who are, which are heavily affected by this epidemic. All right, they want cash to run their businesses. Okay, or those who are those who have heavily invested in the market for upside, on specifically on the stock market for upside. Yeah, no, they believe that this is not a right time to hold their positions. Okay, for more upside. Yeah, because fundamentals are changing on grounds. Okay, their jobs are being affected. All right, and businesses are being affected. All right, so what they're doing, they are they are cashing out. All right, they are cashing out. They don't want to hold their assets. They are selling their assets, and they are preferring to hold their cash. Okay, and they are running after dollars. All right, and what is the best currency to hold in cash? Is the dollar. Dollar is the best currency to hold in cash. All right, because this is dollar is the reserve currency, world reserve currency. All right, and and that's the reason everything is just falling. Okay, so people who are putting cash on sidelines, all right, now they are waiting, they are watching for the market to stabilize. When market going to stabilize, that cash quickly going to come into the market. Okay, they're going to be panic buying. Yeah, so that people not gonna miss the opportunities. So aggressive buying gonna come, then market gonna start to keep pushing higher aggressively. Yes. Okay, no, there are not enough you know there are enough dollars in the market. Lack of liquidity means there is less supply in the market. Okay, so same on UK oil, one more drop or test the previous bottom and reverse Brent. Okay, and Bitcoin. Okay, so Bitcoin went lower again, same like the previous chart. All right, so Bitcoin to form new low and break out aggressively and continue, or new low. The best price to hold Bitcoin for longer term is the 3,000 or 3,500. All right. Yes, that's a sign of recession. Not a sign of recession. You are already into the recession. Okay, when market drops more than 30%, yeah, or 35%, you are in a recession. Okay, or when yield, when your 10-year yield over, goes goes beyond the zero. 10-year yields over 2 goes beyond, when you are having inverted yield. Okay, that means you are going to see recession, and that was giving us a signal in August last year. Yield was giving us a signal. Okay, so this is the trade. Okay, that's the trade. Okay, so this bottom, longer term buying on the Bitcoin. All right, so this is the chart you follow. All right, this is the chart you follow. I have shown you that before. Okay, if quick aggressive move is going to come like that, okay, you're going to see reversal. Okay, you're going to see reversal everywhere in the market, and we're going to have that virus. What virus has to do with that? With that, virus is asking people to not come outside, stay at your home, don't go for a job, all right, don't go for food and rest of the things, stay at your home. When you are staying at your home means that economic activities are not happening. When economic activities are not happening, market will keep going down. Okay, so that's it for this week. Hopefully you guys have enjoyed and have learned something. All right, market is running into a one way. All right, one way trade is happening, and soon we're gonna have stability. All right, and there're gonna be a plenty of opportunities. So thank you. Have a nice weekend. Stay safe. Stay at home. We'll see you back again in another weekly market outlook. Until then, bye bye.